Hi, today my group members are going to present the deductibility expenses under Income Tax Act 1967. I'm Join Chua and my group members has Leong Wai Ping, Adam Wang Ching Hao, Fatima Loy, and Subhasri. Next, Subhasri are going to present the first point.
Hi teacher, I'm going to present my part, which is research and development and training. Okay, so first of all I'm going to talk about approved R&D expenditure. It is incentive provides for a double deduction for eligible research expenditure, which is income in nature related to a business entity's research program, which is Brilliant STN BHD Corporation. So a double deduction made when measuring the adjusted income of the Brilliant company. So research must first be authorized by the Minister of Finance. So second will be contract R&D company of Brilliant company is one of the offers R&D service in Malaysia only to companies other than its profit generated. So the Brilliant Sedia Berhad company, which offers a 5-year exemption of 100% rather than the normal 70% of statutory income, or interactive tax assistant, which requires 100% rather than the standard 60%. So it is eligible to capital expenditure incurred within 10 years rather than the ordinary one 5 years. So to be deducted from taxable income, any person who pays for the use of contract R&D company or service will be subject to a double deduction under Section 34B of the Act. So next will be R&D company of Brilliant Sedian Berhad is described of the Promotion Investment Act as one of the provides R&D service in Malaysia to it related companies or any other companies. A company that is a part of R&D Brilliant Sedian Berhad is not eligible for peon status. Instead, it is only eligible for ITA. The ITA allows you to deduct 100% of qualifying capital expenditure incurred within 10 years against 70% of the statutory required deduction. R&D company should apply for ITA bonus. So the last one will be in-house R&D Brilliant Sedian Berhad. PIA defines R&D carried out in Malaysia inside the company for its own company. So for such in-house research, the ITA bonus, which is 50% of qualifying capital expenditure incurred within 10 years, is available. 70% of taxable income is deducted from ITA. So the in-house R&D advantages allow for R&D capital expenditure while double deduction for non-capital expenditure only. Thank you.
Hi, I'm Fatima Loy and I will be presenting about the promotions of export in this assignment. So as what we know that in Malaysia economic, they has long relied on the agriculture and manufacture good export, and the export sector in Malaysia has grown due to the development of manufacturing sector. This opportunity is to promote the growth of major Malaysian trading firms in order to help Malaysian export trade. So how to increase export and the deductibility of expenses. So what should a Brilliant Sdn Bhd company have to do to increase the export is where they have to export the finished good and agriculture produce exemption. So in these promotions of export, it is double deduction. The wage exclusions for expanded export of 16 eligible services when clients are served by the healthcare providers by the Malaysia. So double deduction for qualifying expenses is promoting export of all services, for example, like higher education services, services that provided by the professional, as well as a deduction for hotel lodging. So how do we apply is where the company must present a letter from Malaysia External Trade Development Corporation that certifying that Brilliant Sdn Bhd company is established in Malaysia and that at least 60% of the company issued by the share capital. So Brilliant Sdn Bhd company has generated annual revenue of more than 10 million, which is not more than 20% of its annual sales were derived from commodity trading and the banking, investment and insurance, as well as the local ports and airports are only uses for facilities. Next is about the tax efficiency. So Brilliant Sdn Bhd company is eligible for the tax exemption of 20% of the amount of additional export and up to 60% of limit of statutory income for the assessment year. So export sales is referred to the sales derived from the export of local and manufactured goods and services but exclude from the trade fees and income derived from stock exchange trading. Next is the opportunity of the export promotion. The opportunity Brilliant Seram Berhad Company is where the corporation currently involved in commodity trade to diversify into foreign trading of product as they are likely to have required the amount of export to start with. So in conclusion, those business must be bear in mind that a commodity export should not exceed to 20% of overall annual sales revenue. So that's all from me. Thank you.
Hi, my name is Edwang. Today I'm going to present about hire purchase transaction. Hire purchase is used to buy expensive items which a person cannot afford to pay out, right? For example, car, lorry. So a down payment is usually paid and the balance is paid over a several monthly installment. So as you can see from the diagram, a person will get a loan from the bank. So as the bank approve, the person will pay the money over a period of time until the loan is fully paid. So what is the condition to qualify for capital allowance? So the first one is qualifying plant expenditure has been occurred. The asset is owned by the taxpayer at the end of the business period. The third condition is the asset is in use in the business period for the purpose of business. So for example, the person buy a passenger car for his employee, and then the car must be used for business purpose only. So the car can be claimed capital allowance for the initial allowance is 20%. So at the end of the year, annual allowance is 20%. So qualifying expenditure for motor vehicle is restricted to 50,000. So the qualifying expenditure for motor vehicle para 2 sub 2 like commercial transportation of goods passengers is restricted to 15k. So however, commercial vehicles such as lorry, truck, bus are not subject to restricted qualifying expenditure of 15k. Nevertheless, the Finance Act 2000 has increased the qualifying expenditure for the motor vehicle to a maximum of 10,000 with the condition that the total of the cost of a vehicle does not more than 15,000. The car has not been used to the prior to the purchase and the car is purchased on or after 28 October 20,000. So if the total cost of the car purchased on or after 28 October 20,000 more than 150,000, then the qualifying expenditure for the motor vehicle will remain at 50,000. Commercial vehicles such as taxi, bus, lorry, or van is not qualifying for the expenditure.
Under Income Tax Act Year 1967, the Director of General can award a special rate for claiming capital allowance on eligible capital expenditures. For instance, assets that were with lifespan less than 2 years is deductible on a replacement basis, and accelerated capital allowance of 100% are given to small value assets not exceeding 2,000 per asset, subject to an aggregate limit of 2,000 for aggregate threshold. The threshold of 20,000 applies every year assessments. Once the threshold reaches to 20,000 within a year, the subsequent additional small value asset reverts to the normal capital allowance rate. Next, the expenditure deduction for small value assets. For non-SMEs, the maximum limit of total qualifying expenditure for small value assets are 20,000 each year assessment. For SMEs, there is no limit for overall number of special deductions that may be claimed on small value assets. Since there is no maximum limit of eligible expenditure for small assets, so there is no need to exclude the cost of any assets. A special allowance for small value assets of fully claimed for amounting of 20,210 ringgit.
Hi, I'm Leong Wai-ping, and I'm here to going to present for you guys about Brilliant Sdn Bhd. This company is considering to recruit disabled person. So, what is disabled person? Disabled person belongs to people that are unable to maintain their everyday lives effectively. The contractor is liable for a claim on the remuneration payable to the disabled person that are working as certified. The boss should show employees that they cannot do the job as an ordinary human physically or mentally handicapped. So next, I'm going to talk about double deduction for employee. So the first deduction is additional remuneration deduction. So this deduction is for employees who suffered from an injury or from other serious ailments is given at year assessment 2019. So this double deduction pay shall be only limited to taxes under section 13(1)(a). Next deduction is tax deduction may be available to residents who have the following services to their staff. For example, money payment bills for cable subscriptions, traveling allowance that provided for workers. As for female workers, Brilliant Sdn Bhd will provide child care center and also double deduction on the following services to their female staff. For example, cost for the supplies and operation of center for childcare and daycare allowance for the people that he works for. Next, Brilliant Sdn Bhd also do provide trainings to unemployed graduates. The double deduction is the annual training allowance for $100 or moreover 12 months charges by trainees, accommodation, transport, and trainers soft skill training fees. So next, I'm going to talk about tax efficiency. So the first tax efficiency is pre-commencement expenditures. So pre-commencement expenditures should be carried out, and these expenses are not deductible since they are said to be born to generate more revenue and expenses incurred for the initialization of revenue earning properties. Employees are scarce as they add to the growth of business. Government only permits the employee a tax allowance on expense of recruitments and trainings. Just the first year that a company starts shall the deduction be made. Next is recruiting cost. So recruiting cost was only granted tax deduction in the first year of review in respects to staff recruitments whenever the enterprise begin. So that's all for my part. Thank you.
The last point for today, small and medium enterprise. Definition of SMEs would based on two requirements for greater coverage and applicability, which is number of employees or annual sales turnover. As a result, whether a company meets the required number of employees or annual revenue turnover, it would be listed as a SME. In primary agriculture, a small and medium business is described as one with less than 50 full-time employees or an annual revenue turnover of less than 5 million. A small and medium business in manufacturing and MRS is described as a company with fewer than 150 full-time employees or an annual sales turnover of less than 25 million. In addition, the company's paid-up capital or total capital is not exceeding 2.5 million and the total annual income from business operation does not exceed 50 million. And also, the company should not be a part of a group of companies where any other company with a paid-up capital for more than 2.5 million. That's all for my presentation today.